Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, September the 1st. The year's 2020. Let's talk trading. Seeing dots. But first, just so you know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. I'm working on that fast voice that they do at the end of those commercials. Where anyway, seeing dots, and I've got Walmal on the line.
Hello, fellow traders. Hopefully you've had a profitable day. It's been good for me, and if you haven't started trading yet, hopefully your day will be profitable.
Okay, well, what we're talking about seeing dots are the mid dots and the balls. Actually, maybe I should have called this seeing dots and balls. But anyway, right now we're sitting at a place where you would enter long, right, Walmal?
Yes, sir. I sorry, didn't realize you were talking to me, but yes, yeah, this would be a good place to go and enter. You know, I'd want to go and see the break of the previous 5-minute candle, the up candle there. Want to see a break of that, and I'd want to go and enter there for a couple of reasons. One, you're breaking that candle. Second thing is got a 3 ball on the bottom that's telling me that good chance we have a reversal that's set in. And the third thing is we're above the mid dot.
Yeah. Now the mid dot is the previous candle's mid dot. So if you go and get the TRO mid dots indicator, we've got show previous mid set to true, and everything else we have set to false when the period is current, and my bars we just have set to 0. So, and right there you'd already be up a pip or two.
Yes, sir. Yeah, and you know, you could have gotten a pip out of this deal. I mean, I don't know if it's going to go up any higher or it's even going to go against us. But yeah, that's the thing. You could have picked up a pip real quick, but we're going to be talking about following the dots, and this is hard sometimes.
Yeah,
following those dots.
Yeah, yeah, and following the dots means in this particular case you get in the trade, unless it goes against you and stops you out. You stay in the trade until the dots tell you to get out. So, and I'll also have the scalper indicator here that'll probably be going out in the next batch. The dynamic support resistance scalper, because we're also using the TRO dynamic SR, which puts in the blue dots on right here for dynamic support and the red dots for dynamic resistance. And so you can see here this trade's reversed off of you, but if you were quick you could have taken a pip or two, and sometimes that's all we look for.
Yeah, and the thing is, what I generally do is, I'm going to be honest here, I usually don't follow the dots until I'm up in profit by a couple of pips, like 3 or 4 pips. I'm just looking at, hey, is this trade really going in my direction? Because I'm always trying to go and minimize any drawdown that I would take. So I probably wouldn't have been following the dots yet. But if this candle had gone the other direction and we got above that 20 line there, the 34.20, at that point in time, on the very next candle, which is probably in about 2 minutes or so, I probably would start following the dots. I'm a little bit more conservative in the sense of I want to go and protect my profit. So I probably would have gotten out with either a 1 pip win or a 1 pip loss or a 2 pip loss, something along those lines. Whereas I know TRO, you probably would have stuck this because the bar hasn't closed below that mid dot yet. Am I correct in that?
Well, the thing is, it's one of those, it depends, and we say that a lot. And the reason being is that, of course, you're trading against the H1 candle color. And if you look over at the range, it has already gone 30. So our thinking, or my thinking, would have been, well, you know what? Chances are it's going to reverse. It's not going to go any further. But the last hour, I was proved wrong, because it was about somewhere around 22 or 23, and then it ran up to 48. So, but I mean, that's just trading. You know, we always say trade what you see. And so here on the scalper indicator, it's ready because we got a 3 ball on the previous, and then it opened above the mid dot. You see this open with here was above the mid dot. So that was the set, and the go is right when price hits that high.
Yeah, and generally speaking, that is usually profitable, And again, you may only get 1, 2, 3 pips on it, but it's really scalping, because that's what we're doing here, is just trying to scalp off. But there's also been trades where I've done this and it just continued in my direction. And I've picked up, I think the best I've ever picked up was 20 or 30 pips off of a deal like this. So it can happen. It's just that, that's not what I'm not sticking in this trade to get 20 or 30. I'm sticking in this trade to just get a quick profit. And if it happens to be still going in my direction, well, don't get out. But following the dots is what gets you those extra pips.
So like here before, here was a trade where the 3 ball or 2 ball was probably here. And then you see here it opened above the mid dot. And then right here, when it crossed above the high, it crossed up, crossed below. So when you look back and you see, well, what can I expect? What's price doing? Well, right here, you see it's making pretty much lower highs and it's making some lower lows this way. So when you take this trade, it's one of those, you were maybe up a pip or two and then it starts back. The worst case scenario should be a scratch.
Right, and that's, you just got to be, I say it all the time, and I know, Kiara, you say it all the time too, you got to trade what you see, and that means that, yeah, the method got me in, but the method's not the reason why I'm still in, and what's the reason why I'm still in or not still in is based on what I see, and yeah, I may use an indicator to help me see what I'm seeing, but the reality is, what is price doing? Is, if I had gone long, is price still going up? Then probably I stay in. If price is not staying, if price is not still going up, it started to reverse on me. Well, it's time to get out of Dodge and look for another opportunity further down the road. And I say it all the time: rather go and recover from a 3 pip loss than go and recover from a 10 pip loss. A whole lot easier to do that. That means I can lose 3 times in a row to get that 1 10 pip loss. So that's more than likely not going to happen.
And right now, as you can see, if you stuck in that trade, you'd be up.
Yep. Yeah, you'd be up right now. Based on where I would have gotten in, you would have been up at this moment 4.5 pips, 5 pips. That would have been a very nice trade.
Yeah, so in this case, you would have taken some heat.
Yeah. And that's part of trading too, because I was talking to a trader earlier today, and the conversation got around. Okay, I made core. Okay, now I made more than core. I made another 10 pips above my core. So now I got 10 pips. So in a trade like this, I've got 10 pips in the bank that, if I lose them, don't want to lose them, but I'm willing to take a little bit more heat because I've got that as a buffer. Probably would have stuck this out because of that. And if I would have done that, as soon as that thing hit, 4 or 5 pips, I probably would have punched out. I'm being honest with you. It probably, but following the dots would say, no, you stick in that trade. You stay in this trade, wait for this candle to close, and if the candle closes and you're above the mid dot, well, that means I can go another candle. And, look at what it's doing right now. It's obvious that unless something catastrophic happens in the next minute or so, it looks like this candle is going to close above the mid dot, and it'll be a reason to stick in the trade.
Yeah, and you see it just put in a 1 ball right here, and that's usually a sign that price is breaking out. And as you can see, price is breaking out. So when you see that ball first appear, it's telling you price is breaking out, and in this case, it's breaking out of 5 bars right here. If you go back to this bar, 1, 2, 3, 4. So this is like a 5, the highest high of the 5 bars. And see, most people think these dots are reversal, and back here we traded it off of reversal. But when the dot first appears, it's telling you price is breaking out. And as you can see, it just pulled back about what? How many pips?
6 pips.
So
4 or 5.
Yeah, so that's why. Yeah, I have the rule. When I see the dot, I'm usually out. Look at that. Yep. So there's why you take it before the market takes it back.
Right.
Go ahead, Walter.
Yeah, I was just going to say, that what happened was we actually, from where my entry would have been, I would have been up 12 pips on that trade. So I would have moved my stop loss to 5, and I was still above the mid dot, you just go for it, and see what happens. Yeah, I would have gotten stopped out, but I would have gotten stopped out with plus 5 pips. Would have been a nice trade. Would have been nice to get to 12. Sure, it would have been. But here's the thing. I said earlier on this call that, there's the possibility you can pick up 20 or 30, and I've had that happen for me. So that's why you stick it out sometimes. I look at it as, I've got a free trade. Why not? Why not go and take the opportunity? I know I'm going to walk away with at least 5 pips in the bank. That's good, I'm willing to take that risk, especially if I've made core for the day. I'm willing to take that risk because I may get that, that as you call it, Tiro, that mega trade where you get something, out there. And I've had trades that have done that. And also a lot of times I've gotten stopped out with 5. It'd be an interesting study to figure out how many times I got stopped out at 5 and how many times I went and got the mega trade. But, I haven't done that work, but.
And you can see here, this price opened below the mid dot. So if anything, that's telling you to be out of the trade. But the other thing, though, I think, Walmal, you have to say, if that would have been your first trade of the day and you were up 10 or 12 pips, you'd be punching out because that's your core, right?
Absolutely. I take my core, take my money off the table. That's what I need to make, and that's why I do that. Just get out, okay? And then I can make the decision. Am I going to continue trading that day or am I done for the day? I can make that decision at that point in time, and, sometimes I do, sometimes I'll go and that's it. And sometimes I'll go and say, you know what, let's go and try to get more. I like the way the market's moving. I'm able to go with, not only do I like the way the market's moving, but I'm seeing prices that moves correctly. And, and there's got to be some synergy that happens there where, what we're doing is we're trading price movement, and because we're trading price movement, there's 2 things that have to come into play. One, the market's got to be moving nicely, meaning it's moving in a methodical, steadfast way, okay? And secondly, I've got to be able to see it. I've got to be able to go and make that judgment. I see the price is moving up. I see the price is going to stall here. I see the price is going to fall here. And not that I'm some crystal ball reader, but the thing is, you get into this thing where more times than not, because you've been watching charts for so long, you start to see that. And if you have the statistics behind you, you can be deadly with it. You can catch some moves. Sometimes you don't, though. Sometimes the market will surprise you. You go back a couple hours ago when we set the high for the day. The reality is that it just looked like, it's going higher even because we just had a huge, candle into the up direction and it closed nearly to the top. There was a wick off of that high of maybe 2 or 3 pips at that. So next 5-minute candle, it certainly is going to go up, right? Nope. And then it's when it had its drop. When it started to drop back, and so things like that are going to happen, and that's why we have risk management.
Exactly. Now, if you're looking and you see the scalper has a couple of red checks because right here we had a 2-ball. A 1-ball, and then price opened below. So the trade would have been short right here on this candle. So if you're wondering why this happened, that's why. But we're coming off of a 3-ball on the bottom. And so usually, until I see a 2-ball, I don't start to look for reversals back. The 3-ball has more power than the 1-ball. And as you can see, now we're pushing the 1-ball up again. It's breaking out. Man, that, one of these hairy hindsights, it's like looking at this trade when it crossed above this mid dot, could have jumped in at that 20. And you know what? This is the third 5-minute candle, so that means we're almost done with the fastest 15 minutes in trading. So for those of you who've been wondering about when we're talking about the dots and following the dots, hopefully that helps you out. And if you've got any questions, post them in the comments, and we'll do a couple more of these dot videos for you. So, fellow traders, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe. And everybody, please give me a like. Help YouTube make these videos a little more popular. This is TheRumpledOne, over and out.